Hey guys, Boris Tasser for BK Forex. Welcome to our BK Technicals for 0980912 for 2014. Where are the trades? A really, really interesting week that we just had by. Of course, euro dollar dominant in this week. Look at this move. 200-point move on Thursday. Biggest move decline that we've had in 3 years off of the ECB announcement. They're going to cut rates. They're going to essentially initiate a small version of QE and basically pushed the euro all the way through very key support levels 31 and 3100, 13100 and 130, and tested actually almost to 2900 before coming in. The price action in the euro looks still consistently negative. One of the things that we talked about a couple of weeks ago was this runaway gap to the downside that never got properly filled. We gapped to the downside a couple of Fridays ago, and that gap never got filled. That's sort of a very, very negative technical formation. And it means that we probably have more trending to the downside and certainly quite a lot of upside work to do before we can refill this gap. The move here today against a negative US dollar NFP is also got to be worrisome for anybody who's trying to bargain hunt on the euro here, because we completely reversed the spike high. Now, having said this, though, we're still holding 29, and 29 is still a very, very key support level. If we go out on the charts, on a longer-term scale, the big support in the euro comes in around 27.50. So there's still scope for further downside price action. But clearly, we are at sort of like the near end of this particular move, especially given the fact that you have this move in almost uninterrupted fashion from 3,700 all the way down now to practically 2,700. A 1,000-point move in the currency without any kind of a meaningful bounce back. Very, very unlikely over the long run, and it certainly just screams for perhaps a couple hundred point move back. Having said this, though, this 29 may still be tested. I would say probably 28.50 is probably going to be the zone where a lot of the bargain hunters are going to come in front of that 27.50 area. So if you're looking to start scavenging on the bottom here, this is definitely a scaled down trade. This is not a situation where you would plow in full force at these levels, because you still have maybe a couple hundred points to the downside. But on the other hand, the fact that I think the downside momentum is certainly going to slow, given the very, very rapid decline, suggests that we certainly are closer to the bottom than we are to the top for the near term, for just a dead cat bounce. Again, I don't want to misinform you and think that I think there's a major reversal in the euro. No, this is going to be essentially setting up for a dead cat bounce. But that, I think, is going to be the higher probability trade going over the next couple of weeks. And that dead cat bounce could take us initially to 31, and this 31, 32 then is going to become a massive, massive ceiling overhead, especially given the fact that we have this runaway gap above it. But kind of a mild plucking of positioning, perhaps over here, but certainly starting at around 29, probably gives you an interesting entryway into a little bit of a bargain hunting move. Now, dollar yen, quite the opposite story, but still actually, this is, I think, in some ways very resilient for dollar yen bulls. We had negative dollar news today. NFP's missed. This 105 has been a very, very, very tough level to overcome, and yet we really didn't correct as badly as you would have thought the data would have necessitated. The fact that we're kind of holding above the 105 is mildly positive. The fact that basically that we're holding above 104.50 overall off this breakout level still remains to be a very, very positive aspect. And basically the idea here is that as long as we hold above 104.50, this big breakout uptrend remains in trend. The next absolutely critical level for dollar yen is this 106. We need to close above 106 to create fresh yearly highs and to create essentially new momentum for a potential move towards the 107, 108 area, ultimately perhaps towards the 110, as obviously US rates against Japanese rates begin to expand. Cable is on life support just like euro is, although we did finally see just a modicum of rebound here. We tested the 62s, which is really, I mean, if you look at cable, the euro was down, but cable has just been down 300 points over the period of this week in just massive downsides. We do have some interesting geopolitical news setting up, obviously. Just September 18th, not the next week, but the week after that, will be the Scottish referendum. That trades positively. In other words, if Scotland decides to remain in the UK, we could set ourselves up for a relief rally in the pound. If it decides to spin itself out, all bets are off. We could be seeing 160 easily. We could be even seeing maybe 157, as that really creates a very, very uncertain situation in the whole UK economy. So watching that as the primary geopolitical risk, everything else is sort of secondary as far as the economic data, because nothing really matters until that situation gets resolved one way or the other. But so far, the Independence Party is still behind in the polls, although it's really narrowed its lead. And that is what's creating a lot of this concern in cable as a geopolitical risk. So very, very tough trade to take. If you're a brave man to buy down here, but if you're right on geopolitics, it's going to probably pay off well. But there's just an enormous amount of risk here that's just very difficult to calculate. Aussie, on the other hand, continues to be the bull all the way throughout. It's getting tremendous amount of flow from carry trade flow, although next week is going to be a very interesting week for the Australian dollar. So we had this, very uneventful RBA statement, but next week we get the Australian employment data, and that's going to be critical because we really, in order for Aussie to sort of maintain its bid, the market needs to be convinced that the economy in Australia is modeling on through. If we start to see a significant surprise to the downside, this could unwind a lot of this Aussie rally on the assumption that maybe the whole premise of RBA not cutting rates anymore goes out the window. If Australia becomes a situation where there's potential for further rate cuts, it loses huge amount of its bid on a carry trade luster, and that's what could create a much steeper decline in the pair. Technically, we're basically looking at a series of lower highs. So the possibility of failure is pretty strong here. This 94, this 94.50, this 95, this is all a series of lower highs. And unless we take out these highs, certainly until we can close above the 94 on a closing basis, the downtrend still remains in place. But of course, all of this is really going to be resolved probably by the employment data on Wednesday more than anything else. So be watching that very carefully. As a sidebar to this, and I'll talk about some of the crosses in a minute, a sidebar to this, what I think is interesting to note here is, and we've had a little bit of a reversal here already. This has been a runaway trade the other way, right? So we had a upside gap, unfilled, running away. Today is sort of the first day where we're seeing just a modicum of profit taking. This is a trade that is very, very difficult to short because it just seems to be like such a strong momentum trade. But it's a trade that is a momentum trade based upon the assumption that Australia is not going to cut rates anytime soon. RBNZ is on deck this week. Nobody's expecting anything out of RBNZ, and in fact, the Australian monetary authorities and financial authorities have all tried to talk the Kiwi down. But the Kiwi has really come down quite a lot relative to the Aussie on this whole idea that there will be no more rate hikes out of RBNZ. But the story here could flip to the downside if the market begins to fear potential further easing from the RBA. So again, this is a very brave man who wants to short this against a massive uptrend, but it is grossly oversold. And certainly this 1250, 1300, basically 1300, 1350 probably represents a relatively decent value area for shorts, if for nothing else, just simply a small correction back down to 1200, perhaps down to 1150. So I think it's worth considering next week ahead of the news, and then certainly if the news is negative, that would give it a greater impetus for a correction all the way back down to like maybe 111 as the unwind of all of this massive speculative long builds comes out of the Aussie. So that's worth watching. Dollar CAD, relatively quiet today. The Canadian data today, I think, was relatively neutral. We've sort of, just consolidating. Dollar CAD pretty much remains to be the 108, 110 trade to both sides. There's a little bit of potential here to the downside if we get dollar weakness, but it's a lackluster trade. There's just very, very little movement here either way, and I don't think it's an interesting look at this point. The Kiwi, on the other hand, has been probing its downside several times. And I think today's price action is actually relatively robust because what we saw in the Kiwi here was this probe of the 8250 level and a more or less bullish engulfing. It's not quite a bullish engulfing. In other words, it would have been great if we closed 8350 on the move. But the fact that we kind of found our bottom and held our gains here suggests that maybe 8250 is a near-term bottom for the time being. and certainly presents another way of trading the whole Kiwi Aussie Kiwi product set. To the long side, if you believe that there's further upside here on the COM dollars. I still prefer the Aussie Kiwi to the short side as a long Kiwi trade rather than a pure Kiwi dollar trade. But either way, I think might work a little bit here. The dead cat bounce here is to 84 certainly, and the risk here at this point, I would not really be sticking around past 82.50. I think if it breaks 80, let's say 82.35, if we're anywhere there, I'd be bailing out of this trade. Basically 100 points from the levels here, because then you're clearly wrong. We still have further continuation to the downside. But again, this pair has come down almost 500 points, more than 500, practically 500 points off the top. It's due for just a small couple 100-point retrace. So whether you like Aussie Kiwi to the short side or Kiwi dollar to the long side, there may be some potential here, for a pickup. As far as everything else, the crosses themselves are not showing any meaningful movements, one way or the other. One thing that obviously was working very well was the Aussie Yen cross. The Aussie Yen cross, which has just been a monster move here, all the way from 94 to 98. But I think we're approaching these really, really critical 100 levels, which is always going to be a massive resist level. Again, really hard to kind of want to short this at this level, but still look to consider it, maybe on a scale-up basis, just as a spec trade for a small correction, perhaps down to 98, maybe around 97.50, just at these levels. This all basically supposes that we have a weakening of the Aussie trade across the complexes this week. If that supposition is wrong, of course, every one of these things goes haywire. But I do think that we have a potential here for some profit taking to be taking place in the Aussie dollar, and that could be one of the better looks this week as we go through the trades. So bottom line here, maybe pick up of euro on a just pop back. Maybe a little bit of a correction on the Aussie. This actually, by the way, brings me down to one other thing that I kind of want to just take a look at, which is, if you see the weakening of the Aussie, again, this is Euro Aussie, massive carry trade flows, just huge declines. It seems like it's just a one-way trade to the downside, but here again, 37.50, possibly just some dead cat bounces back up to 39, back up to 140, could be in the offing. Especially if you get the the Aussie weakness. My favorite Aussie weakness trade still remains the Aussie Kiwi cross, just because I think the expectations here are going to have to be readjusted on this move. So that's how the week shapes up. I wish you guys the best of luck, the best of trading. Next week should be an interesting continuation of all the flows that we had this week. Boris Schlossberg for BK Forex, over and out.